Good afternoon. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I am Hardus and with me.
Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Vivek Iyer and with me today is Hormaz Fatakia. Hormaz, we are coming out of what is essentially very truncated week. Today globally, we have what is again a truncated week. Remember, Easter holiday is going on as far as US markets and a whole host of other markets are concerned. We have quite a lot lined up in today's edition of Midcap Radar. Let's start off with the top headlines. Stocks gain with the benchmark Nifty index stamping 24,000 after foreign investor buying since last week. IT and PSU banks are the biggest gainers. Nifty Bank hits a record high. Midcaps outperform. Tata Elxsi reverses early losses despite reporting a decline in profit after tax in Q4 FY25, with contraction in margins in 8 out of the last 9 quarters. The management says they expect growth to return from Q1 FY26. Wind power stocks like Inox Wind, Suzlon Energy surge in trade after the Ministry of Renewable Energy releases a draft notification for a revised list of models and manufacturers. Management of Inox GFL Group tells CNBC-TV18 that the draft policy for localization is a big positive for the domestic industry. Just Dial rallies over 11% on the back of its Q4 results. Revenue rises 7% year-on-year. FY25 growth grows 9.5%. And Yes Bank rallies on the back of its fourth quarter numbers. Net profit beats estimates, while net interest margin comes in at an 8-quarter high. Welcome to Midcap Radar. Well, it's a screen that's completely green. As you can see, the Midcap index is up over 2.2%. The small cap index is up over 1.8%. As far as the advanced decline ratio is concerned, or the market breadth, as you can imagine, it is firmly in favor of the advances. And the IT pack, especially the Midcap IT pack, is what is keeping the markets higher, especially when it comes to the broader end of the markets. Just as we speak, a name like Birlasoft, that particular stock, now near the day's highest point. But a whole host of other stocks is what Hormaz has on his radar. Hormaz just stepped across to this wall. This is the special segment, Midcap Movers. Hormaz will take us through the midcaps that are moving around in the session.
All green today on the screen, be it the broader markets, be it the benchmark indices. It's difficult to find losers, so we will stick to the gainers in today's trading session from the broader markets. 1,200 points higher now on the mid-cap index, and there are names like Aavas Financiers, TBO Tech that are doing well for themselves in today's trading session. Among the top gainers in the broader markets, Techno Electric also seeing gains of around 7%. Of course, there are a lot of stocks that are reacting to their results predominantly from the mid-cap IT space, be it Tata Elxsi after some optimistic management commentary is up 9%, Just Dial 2 up 11%, the top gainer on the Nifty 500, and Angel One after the management saying that the worst is over is up 6%, and that has had a rub-off on a lot of the capital marketplace as well. Now, some of the other movers then within the broader markets, the newsmakers in today's session, be it GAIL after the announcement of a potential tariff revision, Suzlon, of course, on the wind ministry notification is up 7%, and Coforge after Motilal Oswal Mutual Fund bought some stake on Thursday is also seeing healthy gains in today's trade. And as I mentioned about the capital marketplace, a lot of the moves on Angel One have rubbed off on names like Nippon Life, HDFC AMC, BSC, KFintech, all of them seeing gains of anywhere between 6 to 7%. And lastly, stocks that are doing well on the back of strong volumes, and they include the likes of Cochin Shipyard off the highs of the day, still holding on to gains of around 3%. Anantraj is up 6% reporting results today. L&T Finance is up 5.5%, and Aptus Value 2 is up 3% on very strong volumes, Vivek.
Thank you so much, Hormaz, for joining in, telling us about all of the movers as far as the broad end of markets are concerned. Get back to your seats so that we can take the show forward as well. Well, you did speak about some of the stocks from the capital markets doing very well. Well, one stock that's seen a very sharp up move, especially in the last couple of hours, is MCX. Again, option trading volume over there is very strong. And when you look at MCX, this particular stock too is a strong mover in today's session. But it's now a good time to welcome Chandan Taparia from Motilal Oswal Financial Services for a technical check on the market. Chandan, well, the Nifty Bank at a record high, Nifty firmly about 24,100. Do you see markets surging from this level on as well?
Good afternoon. Thanks for having me, Vivek. So really, we have seen a decent run-up of more than 2,400 points in Nifty index in last almost 8 trading session, we have seen a V-shaped recovery and market managed to reclaim the 24,000 marks back. The good part is that index has been making higher highs, higher lows, and the base of the market is gradually shifting higher. So I believe till it holds above 22,850 zone, ongoing momentum could continue. Apply buy on decline strategy with support of 23,850, and Nifty index has potential to rally towards 24,444 to 24,750 marks. Talking about Bank Nifty index, here we are clearly witnessing this strength. The index has outperformed, has been making higher tops, higher bottom, surpassed the previous lifetime high of 54,467, heading towards 55,500 marks. We have seen a rally of almost 5,500 points or 6,000 points in last 8 days. So I believe this momentum could continue, and entire BFSI segment could do well. So till it holds above 54,750, Bank Nifty has potential to rally towards 56,000 to 56,500. So positive stance in both the indices, and Bank Nifty and entire banking and financial space is likely to outperform the market. If I add about the seasonality index, we have noticed that in the month of May, June, July, usually market remains positive. July has 90% track record of the index to be in positive, and June has 80% track. So I believe the ongoing momentum could continue for a next 2.5, 3 months. And if this speed continues, then I believe the Nifty can head towards 25,000 and Bank Nifty can head towards 57,000 on positional point of view as well.
Chandan, good afternoon. Thank you for joining in. What's on your stock specific list? Are there the large cap private names that are making new highs within the banking names, or is it the IT names, or is it something else?
So I think better to focus on the relative strength. We have noticed that banking and financial sectors are doing well, and most of the private PSU and the financial names are heading to the new high zone, and I believe one should continue to remain bullish here. So Bajaj Finserv could be the first name. We have seen a rally of around 3.5-4% for the day. Longs are being added, and after the 4.5 years, the stock is heading towards the new lifetime high. So a multiple years breakout is visible on the daily, weekly, monthly chart. So with support of 2065, Bajaj Finance can be bought for an upside target towards 20 kind of level. Apart from Bajaj Finserv, one can also look at the consumption theme. Crude is falling down, and Indigo is one of the strongest name in this market. Already this stock is up by around 20% on YTD basis and has been doing well from last couple of weeks. Recently, it gave a breakout from the triangle, and after that, it retested and turned higher. So with support of 5350, Indigo can head towards 5650 kind of level. So Bajaj Finserv, Indigo, these are the name which could do well even at current scenario, and we believe that BFSI segment can do well, and Nifty can also see the buy on decline stance to commence the next leg of rally.
New highs for Bajaj Finserv as well in today's session as well for Indigo. Chandan, thank you so much for joining in with your views on the index and on specific stocks as well. But as we slip into a short break, here's some good news for our viewers, and that is of course the CNBC-TV18 app for getting India's business news leader in just a click away. You can get all the financial news updates, in-depth articles, and of course breaking news on just your fingertips. And you can download the app from the App Store or the Google Play Store. And of course, you can also scan the QR code that comes up on your screen to download the app. Take a short break, back on the other side.
Welcome back to Midcap Radar. Well, have a look at some of the two-wheeler stocks. The entire market is buzzing and we're seeing a green screen, but the two-wheeler stocks, especially in the last half hour, have seen renewed buying. So look at a name like Hero Motor, that particular stock higher by almost 2.5%. Bajaj Auto almost 3% higher today. Hero Motor too is doing quite well. TVS Motors is the other name that we're looking at. All of these stocks are doing very well. But moving on, one stock from the broad end of the market that's doing very well is Jet Dial. The stock is surging after the company reported its Q4 numbers. Rima joins in with more details.
Thanks so much for that. So for Just Dial, let me give you 3 reasons why the stock is higher. For starters, the company's collections have improved. In Q4, the collection growth was 11.3% higher than what we've seen in the prior 2 quarters. Secondly, the cash in the books is in excess of 5,000 crore rupees, and that is 60% of the company's market capitalization. And the third reason is the company has been improving margins. In FY25, that's the year gone by, they managed to improve their margins by 860 basis points, 8.6%, and margins are nearly at 30%. That said, Q4 revenue growth has been a bit slow for the company. Revenues for the company have just gone up by close to about 6%. So growth has been slow. But as I said, three reasons why the stock is higher in trade.
Indeed, and it's doing well as well, right? The top gainer on the Nifty 500 index is Just Dial. Three important reasons. And of course, Rima, Tata Elxsi as well. What a sharp reversal that has seen. Some optimistic management commentary behind that.
Indeed, it's taken a lot of people by surprise, the price action today. So, Q4 was a disappointing quarter. The company's top line declined by more than 5%. This was the third consecutive quarter of a miss. Margins have come under pressure. EBITDA margins at 22.9%, sharply lower compared to the 26.3% prior quarter ago. Profits are down close to about 12-13%. But what could be driving the stock higher could be the management commentary. So management in the conference call spoke about growth stabilizing in Q1. They spoke about FY26 perhaps being better than FY25, given the deal wins that they've had. In Q4 itself, there were some strong deal wins. In media and communications, there was a $100 million deal in the automotive vertical, which saw a decline of 10% in Q4. There was a deal win of €50 million. So all that could be aiding sentiment, and the management at least seems to be confident about things stabilizing after a rough Q4. Also, bear in mind, the stock has fallen a lot. In the last 3 years, the stock price is corrected by nearly 35%. That said, brokerages still remain a bit circumspect. Kotak, Ambit have a sell call. Their target price ranges from 4,000 to 4,500 crore, lower than the current market price.
Thank you so much, Rima, for joining us, talking us about a couple of stocks today that are seeing the big moves, both Just Dial as well as Tata Elxsi. But we now shift focus to the city gas distribution companies. The government is taking measures for sustained allocation of affordable gas. Sudarshan joins in with more details on this particular development.
So over the weekend, we have heard that government has announced some changes to the domestic gas allocation, and it includes both APM, that is Administered Price Mechanism, and NWG, that is New Well Gas. Now, what does it say? So first, related to the domestic gas allocation, now it would be done in the advance, basically 2 quarter advance, the allocation would be done, and allocation would include both New Well Gas and APM gas. Now, second is the NWG, that is New Well Gas allocation, now will be done on pro rata basis. So as of now, it used to be done via auction. Now government is saying it will be done on the basis of pro rata. What does exactly pro rata mean? It will be done as per the demand. If a company has more demand than another company, then the previous company will get the higher allocation as far as New Well Gas is concerned. Regarding the allocation ratios, government has said as of Q3 FY25, total allocation was around 54.7%. Mind it, it includes both APM as well as New Well Gas. And in Q1 FY26, government is saying it would be around 55.7%. And also for Q2 FY26, government is projecting around 54.74%. But it includes both. Now, as per the communication that we had received from two major city gas companies, those are IGL and MGL, total allocation as far as APM is concerned, it was in the range of 37 to 38%. And as far as New Well Gas is concerned, it's around 17 to 18%. Analysts believe that going forward, the range of allocation for affordable gas is only expected to go down. But they are positive on city gas companies because of two major reasons. Now, both crude and LNG prices are soft. Now, they believe that not only in the near term, also going forward, that basically in 12 to 18 months, these prices are expected to remain soft, and that could help company to maintain margin. Will company be required to take the price hike? It depends what exactly the allocation would be in going forward. But now government is saying that, basically confirming that now it's going to be done for 2 quarters in advance. So we can expect the continued or sustained momentum of allocation as far as city gas companies are concerned. And you are seeing big move in all the major names on the back of these announcements.
Sudarshan, thanks a lot for that update. A lot of these city gas players and gas companies doing well for themselves. By the way, is a slight cool off from the highs of the day now. 24,120 is where the index stands, around about a 60 to 70 point cool off from the highs of the day. And the IT index earlier in the show, as Vivek was highlighting, has also cooled off from the day's high, and that is also leading to a bit of a cool off on the benchmark index as well. And a lot of the FMCG names have seen a bit of a cool off today. Marico is down 2.5%. Varun Beverages is also down 2% in today's session, as is Godrej Consumer Products. So a lot of these FMCG names not doing very well for themselves in today's session, falling to the lows of the day as well.
Almost very interestingly, ICICI Bank, that had a very good quarter, very strong NIMs, loan growth slightly soft, is now at the day's lowest point. So that's one key reason why the Bank Nifty as well as the Nifty have cooled off from the day's highest point. But like you're mentioning, we'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, two stocks from the renewable energy space and pertaining to the wind energy space. Both of these companies, remember, are wind turbine generator manufacturers, and both Inox as well as Suzlon today are doing very well in the session. So what is the reason for that? Over the weekend, MNRE, which is the Ministry of New and Renewable Energy, released draft notifications, which is for revised list of models as well as manufacturers, and this is for wind turbine models. What is this particular proposed amendment? The proposed amendment says that there will now be a minimum content of domestic manufacturing required as far as wind turbine generators are concerned. Amendment mandates local sourcing of key components like blades, gearboxes, generators as well as towers. And what is the key highlights of this particular move? Number one, looks to increase domestic content. Domestic vendors now necessary for key components as far as the turbines are concerned. Mandatorily locating data centers in India, mandatorily locating R&D centers in India within 6 months of this particular notification coming into effect. What does this particular move mean as far as the renewable energy space, especially wind space, is concerned? Number one, it addresses key concerns regarding competition, much lower price competition from Chinese OEMs. Remember, a name like Envision from China actually is sitting pretty on an order book of close to 10 gigawatt. Along with it, there has also been potential loss of market share and pressure on wind turbine generation manufacturing margins, which again players like Inox Wind and Suzlon have been talking to the regulators about. So this is an important development. The final notifications are awaited. But remember, earlier today, we spoke to Inox GFL Group Management. In fact, Devansh Jain spoke to us, and this is what he had to say as far as these draft notifications are concerned.
What has been happening in the wind sector in the the post-COVID era, you've suddenly seen a couple of Chinese guys come into India with, I would say, C-grade products. You have more expected to come in, given that we never had any domestic content requirement notifications in place. And I think what this does is a big positive for the domestic industry, where the current policy was that you simply need to have something called RLMM, where turbine manufacturer needs to enlist his model and his plant with the government of India. Under the new regulation, you now need to domestically procure blades, towers, generators, and gearboxes. Now, if you put these four things together, that would constitute almost 75% of the turbine cost, barring the EPC, which anyways is a domestic play. Big chunk of our procurement, 70-75% of the entire turbine cost is anyways domestically manufactured. With respect to some of the components which we are partly importing, we already have a large enough domestic supply chain in place. We'll simply shift the entire volume to these guys. Again, with respect to the remaining 20-25%, look, it's not just China. You've got some components, for example, balsa, which is used in bridges, coming from Ecuador. Everybody gets it from Ecuador because that's 90% of the global market. Various other components come from different parts of the world. So it's not as if everything is only coming in from China. Certain components, the quality is better. They're far more competitive. So, again, I think for us to possibly be 80-85% local is not rocket science. But I think we've got a mix and match in our supply chain. We've de-risked countries in our supply chain. So everything is also not just focused on India. God forbid something was to go wrong with a vendor in India. We had various vendors globally as well. So for us, our supply chain is very, very integral to our success.
So another stock that's making new highs in today's session is Indigo, and the company is now aiming to increase its international capacity to 40% this year, according to CEO Peter Elbers. Now, he spoke to Shireen Bhan and he mentioned that he welcomed the grievance redressal body for customers on airfares, but also called for correlation between costs of doing business and airfares. Now, the Indigo CEO also warned about rising airport fees, saying that it runs the risk of tipping over.
The Indigo International Network, Shireen, is started some years back, very traditional, if you wish, between India and the Gulf and the Middle East countries. We've been slowly expanding that. So in 23, we started flights into Central Asia, we started flights into Nairobi. We have moved, and I had a meeting earlier this week with the CEO of Changi Airport. We moved from moving into Singapore from 3 Indian cities to 9 today. So, but that's still within that 5 to 6 hour radius. I think the next step for Indigo is to make sure that even Europe and further parts of Asia would be accessible directly operated by Indigo. And, you know, if India is going to be the third largest economy in the world by 27, the country needs and deserves actually an airline of the size and scale and potential of the nation.
We've once again seen the parliamentary panel recommend the possibility of looking at intervening in the market as far as prices are concerned. We've now got the government setting up a special cell where customers can actually talk about their complaints as far as pricing is concerned. Would you worry about the possibility of government intervention on pricing at this point in time?
Well, when there's a body where customers can complain about certain things, I think that's a good thing. There's always good for companies to have a body which keeps sort of things in balance and things. So I think in general to have a body like that is a good thing. Having said that, looking at the Indian market, it's one of the most, if not the most competitive market in the world. The average price levels are extremely competitive. There has been some recent reports which made a comparison. How did inflation go over the years and how did airfares go? And actually you could see that the inflation has gone much faster than the airfare. So we need to catch up in that in efficiency and sort of in order to keep the margins. Because in the long run, there must be a correlation between the cost of doing business and the price of airfares, right? Otherwise you'll be out of business. Looking at the price sensitivity, a few hundred of rupees sometimes is enough to have people flying or not flying. So we should be mindful of looking how these user fees will eventually find their way into ticket prices. Because at the end of the day, there's a correlation between what is the price and the cost price of a product and what is the price for the consumer eventually. So full support for all the changes. I think it's important that it's being done, but we should be mindful that, you know, at the end of the day, the price of the ticket is based on different elements, and this aspect is an important part of that, and that should be in line with it.
Is it in line with what you believe is the kind of threshold, or do you believe it's tipped over?
I think at some points it runs the risk of tipping over. You know, if you take the price of a ticket, the price of some of the UDFs should, in terms of percentage and correlation, should be not too much as the total price of the ticket, right? There's going to be fuel and flying and this and that and the other. So I think, again, full support for all the changes we're making, but we should be mindful of what would it do eventually for the total ticket prices.
New highs for Indigo, and also despite ICICI Bank giving up all of its gains, the Nifty Bank too is still holding on to gains of around 1,050 points, still 2% higher. The Nifty holding on to gains of around about 300 points. But with that, we call time on this edition of Midcap Radar. From Vivek, me and the team that put this show together, thank you so much for watching. News and updates continue on the other side.